Okay, it's the 2nd of April. It's a Wednesday, and we have about 30 minutes to the NY Open. Let's get to the charts. Go to the charts in a second. Just want to check everything's fine. Yeah, yeah. All right, 30 minutes to the NY Open. Let's go to the calendar, see what we have today. So we've got some non-farm employment news today at 8:15 EST, right? 8:15 EST. We've got so we're going to wait for that. So we have time for analysis today because we're going to wait until then. Even though it's not an important news event, we're not going to open any trades until then, right? And later on today, Trump is making an announcement on the tariffs. It's making a speech on the tariffs. So just like yesterday, the market is probably going to wait for the announcement to see what he has to say, and there's going to be a reaction with what he has to say. But that's happening in the second half of the NY session. But we're going to do our analysis as usual and see if we have a setup. And if we have a setup, we're going to take it, regardless of the news event later on. I mean, regardless of Trump's speech later on. It's NFP week, so Thursday, Friday should be high volume days. Yesterday, I know it's been slow for the last few days because of this, with what's happening around the tariffs. The market's waiting, right? It's waiting to see what are the tariffs going to look like, and once they're out, obviously the market is going to react. And then when individual countries, if they respond to it, then the market's going to react when they respond to it as well, right? And then if the US responds, if the US replies in again, if it responds again to those tariffs, if they hike it up and they respond back, then the market will react to that again, right? So there's going to be back and forth, obviously, for the next few weeks. Okay, so the daily. So just as expected, the daily closed a doji, bearish doji, with no information on this candle, basically, right? So on the daily time frame, if you just look at the daily candle here, this candle offers no information except for the fact that it's a bearish doji. That's it, right? We ranged between 3150 and 3100, right? So we ranged in almost a 500 pip range yesterday. We just went to the bottom, we went to the top, then came back to the bottom, and then we closed back in the range, right? So there was price did push down in the after NYSE. I didn't take those trades, but there was a setup to buy, and that happened later on, and I didn't take that either because that was way outside my trading hours, and I wasn't, even if it was inside my trading hour, I wasn't at the chart at that time, so I didn't set an alert. I didn't come back to the charts after the stream ended, so I didn't take those buys, but there were buys yesterday, exactly as I explained, right? We're going to take a look at that in a bit. But let's discuss about the daily here. Let's stay a little bit more on the daily. So on the weekly, we are very bullish, right? We are very likely still pushing up, probably retest 3150. Probably retest 3150 and head higher. That's on the weekly. But on the daily, we have this previous candle. I would consider this as the previous candle and not this, because this candle has no information on it, right? It's a bearish doji, as I said. So we are still bullish. Price has closed above 3100. This candle has closed above 3100. I consider this as the previous day candle and not this. And price is still looking to push up, right? That's on the daily time frame. Now, when you go down, as I say this always, when you go down time frames, you get more candles, and with more candles come more information. So on the daily time frame, if we ignore this candle, we are still pushing up. But if you go down to the 4-hour, we'll have more candles, and then the story may change a bit, right? So you got to kind of compartmentalize the analysis, right? So you look at the weekly, you see what the weekly tells you, right? Or the daily tells you. If you don't need to look at the weekly, I mean, I don't do that all the time. I probably do that at the beginning of the week or at the end of the week, but I usually go down daily, 4-hour, and then the 30 minutes, right? So, and the reason I do that is because I'm a session trader, so I go down to the 30-minute time frame. So if you start at the daily, then you need to look at what the daily tells you, right? Then you store that information or you log that information, and then you go down to the 4-hour and you look at what the 4-hour is telling you, just by itself. What is the 4-hour telling you, right? So the 4-hour, what the 4-hour tells you shouldn't be influenced by what you already know, that what the daily tells you, right? So look at the 4-hour as an individual time frame and see what the 4-hour tells you. Then you go down to the 30-minute and see what the 30-minute time frame tells you, right? And then you put all that information together, and you look at what I look at what the Asian high, what the Asian session and the London sessions have done, and then I make a calculated guess on what could happen in the first couple of hours of the NY Open, right? That's what I do every day here. Okay, so so we are still pushing up on the daily. This is a doji, right? This has no information. Let's go to the 4-hour. Now, before we draw our zones, let's take a quick look at what exactly happened yesterday. So I ended the stream, I think, around this candle, just before this candle closed, before this 30-minute candle closed. I think that was the close of this candle, or this candle is when NYSE opened at this candle. Yeah, I think here this is when NYSE opened at this candle. So just before this candle closed, I think about 2-3 minutes before the candle closed, I ended the stream because we were just ranging sideways, right? And I was not willing to take a sell here because the liquidity candle was up here and price could pull back at any time to grab liquidity to head down, right? And I was not willing to take buys after I took this buy. I did take a buy here. That was from this EMA. It went up a bit. I think we pushed up about 50 pips, I think, but it didn't hit our TP, right? 3138 was the first TP level. That was the second and the third, but it didn't get to TP1. So price came down and I got out at around with an 8 or 9 pip loss, right? So I managed risk beautifully, okay? And price did come down because this closed 30-minute resistance. So when a candle, if you are in buys and if a 30-minute candle, even if it's a doji, if a 30-minute bear candle closes against you, right? Because if you're in buys, you're anticipating bull candles to close and price to continue higher. But if you see a 30-minute bear candle close, and even if that's a doji, right, you need to think of cutting positions, right? Take something off the table, right? Now, I took off everything when this candle closed, I didn't take anything off the table, but soon as the next candle broke the low, I took everything off, right? I closed everything and I called it a day because we were ranging. Now, after this candle formed, we closed a strong bearish tradable candle. 30-minute resistance was formed here, a strong bearish tradable candle close, and price eventually did drop over 300 pips. We dropped to the liquidity candle, right? Now, I was anticipating this move to happen from up here and not in the middle of the range here, right? Because price hadn't touched the liquidity candle. But because it was a ranging day, we did drop, and then price pushed back and retraced that entire move down. Price retraced that move completely, right? So it dropped what, 300 and plus pips, 330 pips, and we went up 330 pips, right? The entire move was price retraced the entire move up, right? Now, the buys that could have been taken, if you were at the chart, I just want to show you, because I said wait for 30-minute support to form and a tradable 30-minute bull candle to close at any one of these liquidity areas, right? That's the trade setup. So we passed the EMA. Obviously, we couldn't take. We did take buys here, and it didn't work out. So the next liquidity area was the second EMA. Price went through it. Didn't form 30-minute. It did form 30-minute support, but that's a doji, right? That has more collective wick, it has more wick, and it has a very little body, right? So it opened and closed almost at the same area, so that I consider doji, but 30-minute support did form. Price continued to drop, right, through the second half of the NY session, and then later on we formed 30-minute support. Perfect 30-minute support was formed, and that's a tradable candle that you can take the buys to go up. You could have taken it on the pullback. You could have taken a trade here or waited deep here. Your safer stop loss would have been under, as I said, under the liquidity candle, or a more aggressive stop loss can be under the 30-minute candle low that created support, right? And if you did hang on for about 2-3 hours after the streams ended, you could have taken this trade, and this trade got very good RR. Price pushed back up to that area, right? So, and the reason you would have to get out here is because you would have a new 4-hour supply zone. All right, you'll have a new 4-hour supply zone there. That's a rally, 3 basin candles and a drop. So that would be your supply. That would be the base of your supply. The open of that would be 31.95, and that's exactly where price went to. All right, so 31.95, yeah, is around there. That's 31.95, and that's exactly where price went to, right? We went exactly up there, 31.95. Okay, so let's get rid of all of these and start this process again. Okay, we have a rally, 3 basin candles and a drop, right? That's very clear in terms of supply. Rally, 3 basin candles and a drop. Price has come and touched that several times, and it's a wide zone. It's about 165 pip zone, 165 pip zone. Um, let's put the price here on this, 31.95. Yeah. Now we have a rally, and then we have a drop again here. So we're going to take a look at the 1 hour and inspect that area, right? So on the 1 hour, we are seeing a rally, a base, and a drop here as well. So I'm going to extend that down there. Okay, so we cover that supply zone, right? So this 1 hour supply is part of this 4 hour supply. Let's go to the 30-minute also. Yeah, I'm going to bring it down to those 2 basin candles right there. Okay, that's better. So the open price here is 071. Yeah, that's better. So it's a 4 hour supply zone, but because we have a rally and a drop here, there is sort of a base there, and that's the kind of base that the base is actually here, but we have, when we look at the 1 hour, we have a rally base drop here as well, because we have a drop that's happening right now, but on the 4 hour. But we can't draw this based off the 4 hour because the 4 hour candle hasn't closed yet. But on the 1 hour, we have a 1 hour candle that's already closed, a clear, clean drop, right? That's a clean drop of over 200 pips. Price has dropped, and it's left a base there, right? And I use that base on the 30-minute because it's better on the 30-minute. Okay. Let's look at demand. Now we have prices come deep in. We're going to bring this down here because we have this drop, we have a base, and we have a rally. Again, we're going to take a look at this area on the 1 hour. You can see price is ranging, right? You can see exactly what's happening in the market. Price is ranging since the 31st. right? We've been ranging. This is price is ranging because where price is waiting for uh, the Trump speech about tariffs. So since the 31st of March, we've been ranging. So you've missed nothing. If you didn't take any trades since the 31st, which means since Monday, if you didn't take any trades, don't worry about it, right? You've not missed anything. Price has just been ranging inside this, in this area. So if you exclude the wicks and look at the bodies, price has just been ranging in a 230 pip range, in about, let's say, 220 pip range, right? 220 pip range, we've just been moving up and down in a 220 pip range. Because you need to exclude the wicks because the wicks are extremes where price went, it didn't go there all the time. It went there once here, and then again here. So it went twice, came to 3,100, and once it went to 3,150, right? But if you look at the body, because that's the, the chunk of the trading, right, happens uh, at the body of the candles. That's where buying and selling happens, right? If you look at the anatomy of a candle, you have your the open price, then you have the open, high, low, close, right? You have a high, then you have a low, and you have a close. So the majority. So if you, for just for example, if you take, let's take this candle for example, right? Let's take this 4-hour candle. The majority of the trading happened just here in this 19 pip range for this candle. There was a high, there was a low. Price couldn't maintain that high and it couldn't maintain this low. That's where the bulk of the trading happened, in this 19 pip range, right? That the same thing applies if you look at the daily time frame. So the bulk of the trading on this candle happened in a 94 pip range, right? We had a high and we had a low. We had a where price went up. That was the maximum within that day, within that time frame, within that day, within that trading period of a single day, within a single trading day. That was the maximum that gold went up to, and that was the lowest point that gold were, the lowest price that gold went down to. But the majority of the trading between buyers and sellers happened in this 90 pip range, you can say 90, 92 pip range, right? So the same applies on the 4-hour and all time frames. So you have a range here. You have about a 220 pip range. That's where the bulk of the trading happened. The rest are extremes. Okay, so you've not missed anything. If you didn't take any trades until today, don't worry about it. Okay, let's take a look at this area, the 4-hour demand area on the 1-hour time frame. Let's take a look at it on 30-minute. Yeah, I think we're gonna stick to the 4-hour base there. I'll stick to that. Okay, this close 412. Okay, we're going to get rid of this liquidity candle because price has come deep into it, right? You can see how deep we've come. We've almost gone through the candle. Save of 8 pips, right? Saving 8 pips. We've almost gone through the candle. That was a liquidity candle of about 100 and I think it was drawn off the 50-minute time frame. Yeah, this was the candle. It was about 138 pip candle. We've come deep into it, right? So I'm going to get rid of that because the liquidity in that area is consumed. But we do have a base now, a new base here, right? So this is a reaction to this source. We had a rally-based rally, that is the source of demand, and now price came in, we have a reaction, and we have new demand that has formed here. So we have a new demand level here. Price hasn't broken through this yet, and that is why that's still the source. This is a reaction to this source. Okay, so we're going to take a look at this area later on and see if there's a liquidity candle, right? But these are the two zones that we have. We have a supply zone up here and we have a demand zone down here. right? And they're both based off the 4-hour. Let's get rid of this. Let's change this to 4. And that's still a high liquidity zone because price hasn't come there, right? Extend this to the right, but I'm sure that we might find another liquidity candle in here because it's a very wide zone. It's 184 pip zone, right? So we're going to take a look at that later on. Let's extend these zones to the right as well. These are zones that we had, I think, were drawn previously. Okay. Let's extend this as well. Okay. Let's take a look at these new zones that we have. We have a readjusted zone. So it was based off the 1 hour yesterday, but now we've created 4-hour supply here. So we have a near readjusted sort of a new zone here and a new demand zone here. We're going to take a look at these two supply and demand zones and see if they are high liquidity zone. This one already is because we have taken out, there was demand here on the way down, the price did take out. So that is a high liquidity zone. Let's take a look at this one here. No, we haven't taken out anything. Oh, we have. We've taken out this drop, 2 basin candles and a drop, right? So I said, yesterday I said this as well. 30-minute is the lowest time frame that I go to when I'm looking for high liquidity zones, right? I don't go below the 30-minute time frame, right? So once I identify a supply or demand zone, the next step, once I identify a supply demand zone, right, it's usually done on the 4-hour time frame, but sometimes we need to look at the 1-hour time frame to readjust it, right, and sometimes, rarely, even on the 30-minute. And once those zones are identified, the next step of the process is to identify if they are high liquidity zones or not, and that's exactly what I'm doing right now. So when I do that, I don't go below the 30-minute time frame, right? So 30-minute time frame is the last time frame that I check, and if I don't see a price has taken out an opposing zone on the 30-minute, then it's not a high liquidity zone. But here we have a push up that clearly took out this supply, this 30-minute supply. So this is a high liquidity zone. Okay. Right. Next step, we're going to look for a high liquidity candle, right, in both of these zones. It's very likely that we're going to continue to range. You can see the EMAs, they're flatlining. We crossed below, we crossed back above. We crossed below, we crossed back above. We're just ranging. It's very obvious. The EMAs are flatlining, and they're not great conditions to trade in, right? You want to whenever you see the EMAs flatlining like this. Now, if you don't know what these EMAs are, these EMAs are of an indicator. I try not to do any promotions of my tools on these streams, but if you do want to know where these indicators come from, in this YouTube video, if you just check in the description, you will find a link to the price action entry alerts indicator, right? That's what I've used. That's what you see on my chart. And this trade manager that you see on my chart, you'll find a link to that as well. That's called Smart Keys. As you can see, it's called Smart Keys. There is another one, a version of this called Smart Keys Sniper Entry, right? But the one that I'm using here, they're very similar, both of them. But the one that I have here on my chart is Smart Keys. Um, You'll find links for them um, in the description, and then you will find information, the user manuals, all in the Telegram group. Okay. Um, right. So let's take a look at this area. Right. Let's see let's get rid of this. Let's get rid of this. Right. Let's start clean. So we have a demand zone and a supply zone. First thing, the price is in the middle of them. So we're going to take a look at the supply zone first and look for a liquidity candle, right? So I'm looking for the largest. I'm looking for the largest bearish candle. So the largest bearish candle is this one. That's obvious. So we're going to mark that out. It covers the entire zone. Okay, we'll have to go down to the 30-minute time frame. Let's go down to because it still covers the entire zone, so we'll have to go to the 15-minute time frame. Yeah, I think that's good now, right? It's a 159 pip candle, but you can see how price is reacting to it. We've come about 50% of the way into it, but price is reacting to it very nicely. Okay, so let's put the numbers on that. 623055. Yeah. Hmm. Okay. Let's take a look at demand. It's a 90 pip candle. It's a 101 pip candle. Let's go down to the 30-minute. 86, 89. 86, 88. That's larger. Let's go to the 15-minute. 80 pips. 85, 85, 141. Yeah, let's keep it at the 30-minute. I'm going to use this candle. And if you break this, then we're coming here. And then we're coming straight down here. If you break this low, we're coming down. 575, 430. Yeah, it's good. Okay, this is the NY open. We're going to wait for the first 15-minute candle to close, and also there is news. So what we're going to do now is take a look at what price has done in the Asian and London sessions. Okay, and that may help us make a you know probably make a better decision on what price could possibly do. Help us understand what price could possibly do in the first 2 to 3 hours of the NY Open. Right, let's go to the 50-minute time frame. Just a second. Give me 1 second. I'll be back. Just 1 second. Okay. Okay, that was the market open. So the market opened here at 3114.25, right? The Asian low here. That's pretty easy today. 783. Okay, so in the Asian session, we moved 275 pips approximately. And in the London session also, we moved 250 pips, right? So 275, 250 pips. That's quite a bit of volume, but just ranging, right? So it moved up, moved back down, moved up, moved back down, right? So it retraced the entire move that it moved up during the Asian session. It retraced the entire move down, and it retraced the entire move that it moved up during the London session. It retraced that entire move down. Okay, right. So let's see what the market did. So on the way up yesterday, we created a liquidity candle, a 30-minute liquidity candle, right? Price came into it, the market open here, came into it, grabbed liquidity from that liquidity candle, pushed past up the EMAs, and went to the liquidity candle here, back to this liquidity candle, right? It's come there several times, went back to it here. Grab liquidity, pushed all the way down, right? Back to this liquidity candle. Grab liquidity again, pushed all the way up to that liquidity candle. Grab liquidity, pushed all the way down, right? That's all that's been happening. It's been grabbing liquidity from here, going up, pretty easy, right? And then coming down, grabbing liquidity, going up, grabbing liquidity, coming down. That's all that's been happening, right? Now, price is in the middle. It's neither near the London low or the London high. We are 100 pips away to the low and about 130 pips to the high, right? So there's really nothing to do here in the middle of range. You got to wait for price. Yeah, we've grabbed liquidity from the low to push up, and we've grabbed liquidity from the high to push back down. Yeah, I mean, price can come down here. Here's in a range. This is what you do. Here's how you trade a range, right? Very straightforward. I wouldn't say simple, but very straightforward. What you do is you wait here. You got a liquidity candle here. If price comes, taps it again, creates 30-minute support just like it did here. Create a 30-minute support. That's a tradable 30-minute candle, pushed up. Price came down, created support, tradable 30-minute candle, pushed up. Price comes down now. What is this? 14. It's created support already. It's created support already. Just a second. No. Yeah. If price comes down and creates 30-minute support and a tradable bull candle closes, you can take the buys to go back up to this liquidity candle, right? Now, there are two scenarios for buys. Price can come here, create 30-minute support, and push up just like it did here in the past, right? Push back up. Or it can come and break this low, the liquidity candle low, right? Close below, and then close back above. And then we could take the buys to go up, right? Or it could come down to 3100 and create 30-minute support. You can have price can come tap 3100, then create 30-minute support or trade after and then we wait for a tradable 30-minute bull candle to close and then take the buys to go back up, right? Because price is very closer to demand than it is to supply, right? We are about 40 pips away and 50 pips away, and this is about 130 pips away. So we're closer to demand than we are to supply. Hence, we can be looking for buys, right? Not sells, because price is too far away. It's already moved 120 pips from the liquidity candle, from the supply zone. So I'm not looking to take sells here because you got a demand zone right here, 40 pips away, you got a demand zone. So I'm looking to buy. If price comes here, as I said, creates 30-minute support, or breaks below and closes back in, forming 30-minute support, or comes down here, taps 3100 and then forms 30-minute support, I'm willing to take buys to go up if that happens, because we're in a range, right? You got to wait, especially when we're in a range, you have to wait for 30-minute support to form to take buys and 30-minute resistance to form to take sells, right? You got to wait for that. We got news in about 5 minutes. Shouldn't do much. Shouldn't do much. The market's waiting for the bigger news, the bigger Trump news event later on. I got about 5 minutes for news. 2 minutes more for news. What numbers are they expecting? They're expecting good numbers. They're expecting good numbers. But it doesn't matter if it's bad or good. We're stuck in a range. So it's not going to make much of a difference. Good numbers come out, bad numbers come out. It's not going to do anything. We're going to be stuck in this range until the tariff news comes out. Right? It's as simple as that. I said this at the beginning. We're stuck in a 220 pip range. Right? If you look at the bodies, all right. If you look at the bodies, because that's where the bulk of the trading happens. Yeah, 200. In fact, I would say a 200 pip range, 210 pip range, right? That's where we're stuck in. We're stuck in this 200 pip, 210. It's a plus 200 pip range that we're stuck in, and that's going to continue until the Trump speech comes out, which is today, later today. Yeah. So these candles have no top wicks, right? So it's very likely price is going to break above these highs and continue higher. Um, I'd like to take buys, but I want 30-minute support to form to take buys. Yeah. Oops. Yeah. Yeah, the numbers are positive. The numbers are positive. We're expecting 118K. We got 155K, but doesn't matter. It's not going to change the direction of price. We're just ranging. I want to see 30-minute support form to take the trade up, take buys up. That's what I'm waiting for. Yeah, it's nothing happening yet. 15-minute candle closed with a 40 pip candle. We should be heading up. We should be heading up. We should, but we need to form 30-minute support first. I'm going to wait for this candle to close. I'm going to wait for this candle to close before doing anything. It's got about 11 minutes for this candle to close. Let's see where this candle closes if we push back up, because this has broken this low. This one has broken this low. 30-minute has support has formed inside of pre and Y. We can take buys, but I need the candle to close. I need this candle to close. I would prefer if it comes further down and closes, not up here. Yeah, I'm not willing to take a trade with 120, 130 pip stop loss. No way. Yeah, I'm going to wait for this candle to close. I would prefer if 30-minute support forms again before taking buys. This is too early. This happened over an hour ago, right? This candle has just 8 minutes to close, so this happened more than about an hour ago. It's happened, price dipped, and it happened. If this happened here um, at the previous candle, yeah, then I'd still be willing to take buys to push up. But this happened an hour ago, and price didn't push up, right? So just think about it. If 30-minute support was formed, and this is a strong bull candle close, right? It's a 93 pip candle. Why didn't price push up? Because there is no volume to push up. That's all that means. There is no volume to push up. So I'm not willing to take a trade off this candle because in the last hour it hasn't pushed up. If it had volume, price would have pushed up. So I need to wait. I want to see ideally another confirmation. Even a 15-minute confirmation, right? 30-minute support has formed, but maybe a 15-minute confirmation. A 15-minute bull candle closes and maybe we take a trade. I'd put my stop loss, I'd be a little more aggressive with my stop loss. I'd put it under the 30-minute candle low. I'll be more aggressive. If I'm taking a trade here, I'm going to be more aggressive and put my stop loss under that. Right, so I'm going to wait for the 15-minute candle to close because this has broken this low. It's got another 6.5 minutes to close. Let's see where the candle closes. When it comes to the last minute, I will draw my fib, right? So the reason I'm looking for buys is 30-minute support has formed inside pre-NY. Um, Price has tapped the liquidity candle, formed 30-minute support. That's a tradable 30-minute candle. I need to see a minimum of two M15 lows taken out. This one took out this low, this one took out this low. Perfect, right? This one I can't count because this is well before uh, pre-NY, right? Pre-NY starts at 1400 hours IC market server time. So these are the two ones. So let's see. This needs to close a strong tradable 15-minute bull candle. If it closes a doji, I'm going to ignore it. I'm not going to do anything. If it closes a strong tradable bull candle, then I'll draw my fib um, probably from the high of this candle to the low of this candle, but stop loss would be under this 30-minute candle low, under this candle low, and then TPs would be 31.31. That would be first 31.31. That would be first area, and then yeah, I want to see a pullback and come up there. Yeah, I have to be aggressive with my stop loss. Unfortunately, there is no bottom wick here, bottom wick on the 15 either, but I have to keep it here because if I extend it here, that's another 40 pips. No, I can't do that. So this candle seems to be closing bullish. Um, yeah, let's wait for the candle to close. It's high 30, 31, 33. Yeah, we're ranging, so you want to get out. You want to get out at the highs, right? That's exactly where we're ranging. So you want to get out there. If you get in here, that's about 110 pips, and then about 135 pips. 110, 135. Gotta wait for the 15-minute candle to close. Let's see if it needs to close a strong bull candle, a tradable 15-minute tradable bull candle. If it closes a doji, then not doing anything. If it closes a doji, I'm not doing anything. There's no trade, okay? If it closes a doji, there is no trade. Three minutes more. Pushing up. Yeah, I'm willing to enter here, not chase price, pull back. We're forming support again as well, which is a good sign. 30-minute support formed here. 30-minute support is forming here. That's good. Yeah, I'll be willing to take this trade. Push up 70 on a pullback. If you can get, yeah, about 100 pips. 1450. Okay, a minute more for the candle to close. So stop loss would be here under this 30-minute candle low, 3114.5. Wow, that's a nice push up. Is it going all the way without us, without being able to get in? Okay, so the numbers are 513, 513. Okay, and this low is 712. We pushed higher. 533. Wow. Wow. 584. 595. No top wick. 622. Wow. No top wick. Here. Willing to wait here for a trade. Get in here, that's about a 90 to 100 pip trade there, 113 pip, 15 pip there. But I want to pull back. Double 11999. So I got a pending order here. Mm, I got a pending order here as well. 903. Yeah, 50 pips, 45 pips. Yeah, that's good enough. If you get in there, that's a decent trade. Let's see. Yeah, that's where I'm willing to wait for a pending order. And that's where I'm willing to wait for entry, right? So these are my, this is where, now price could come here to 3121.3 and push up also. I'm not sure if I want to take a trade there. I'm going to mark that level. Let's see. Yeah, 3121.3. Let's see if we get there. I don't think I'm not sure. I think we're going to push up. We're heading up. I don't think there's going to be a pullback. If there is a pullback, I'll enter here, right? Because this is a fairly large move. Price has already moved 91 pip candle, 15-minute candle. That's a lot of volume, right? So if it pulls back, I'll get in here with a tighter stop loss, 50 pip stop loss, and about a 50 pip stop loss on these entries to push up here. But it needs to come down. Otherwise, I'm not chasing price. So 3121.3, you can take a trade there, but my trade's lower. On the 5-minute, there is a demand level here. Drop, base, rally. And then I have another entry at the low of this candle because this candle has no bottom wick. We could come and wick this, come further down and then push up. Stop loss is under 3114.5. Waiting for entry. Price could react here as well. There's a demand zone here, rally-based rally, but that's too wide for me. That's too wide for me. My the moment the entries that's too wide. That's too wide. If it reacts here, pushes up, that's fine. I'm not willing to take a trade with a 80 pip stop loss, 85 pip stop loss. For me, it's low. If I don't get triggered and price pushes up, that's okay. But there is a demand level there, rally, base rally, and price can tap it and then push up. Still 80 pips. Yeah, if I don't get entry, I'm okay with it because it's a range in market, right? And I know that this is not a it's not a very good trade setup, right? Because it's in a range in market. If this setup happened in a trend in market like this, that's a trend in market, right? You can see prices clearly above the EMAs and price is trending, right? That's a trend in market, right? You can see how far the trend goes, right? All the way up 1,300 pips, right? 1,300. That's a trend in market. This, see the difference between this and this. This is sideways. This is trending. This setup can happen. This setup can happen anywhere. It can happen in a trended market. It can happen in a ranged market, right? Because it's a very simple setup. You have 30-minute support form. Wait for the pullback. Take the trade to go up, right? I would have preferred this setup in a trending market, right? If you look at when price was coming down, right? Look at that move down. EMA is crossed here. EMA is crossed. Form 30-minute resistance, dropped. We came, form 30-minute resistance, dropped. Came, form 30-minute resistance, dropped, right? Form 30-minute resistance, dropped. So you get the setup in both conditions, but the trended markets are better because you get the price runs. It runs and you get good RR. In a ranging market, not so much. So if it taps this, pushes up, that's okay. I'm okay to not be in that trade. I rather because if I take a trade here and price decides to come further down into this wick, then I'm holding drawdown. Then I'm in drawdown, and I hate drawdown. So I want to, if I'm taking a trade, the setup in itself, the candle structure is good. The problem is that it's in a range in market. We're ranging in a 200 pip range, just pushing up and down because we're waiting for news for the Trump speech later on in a few hours from now. So the market's ranging. Yeah, 15-minute back candle closed. As expected, see, no top wick. 15-minute candle has no top wick, 30-minute candle has no top wick. So price, when that happens, there is a 50-50% chance, there's a 50-50 chance of price pushing up or pushing down. And you can see price is pushing down. Now maybe it's pushing down to create a bottom wick and then push back up. That's possible too. It's just last few days have been very quiet. It's been very yeah, it tests your patience. Range in markets test your patience. It's been boring. It's nothing happening since the 31st, since Monday. We had one 15-minute candle, decent volume, good volume, and then second 15-minute candle. Okay, I'll be back in a few minutes. I'm waiting here at these price levels. This 5-minute demand area. If price comes there to tap this and push back up. TP levels are 3131 and 3133. It should be pushing back to the London high. We came to the London low, rejected it. That's the London low. create a 30-minute support here. So that's a London low. Tested it. It should have broken through because it was tested here, but it didn't. It rejected it, made a decision to push back up, create a 30-minute support, pre-NY session, and it's trying to push back up. So it should come to 3131 or then 3133. But I want price to come further down. I'm not willing to take a trade up here. It's too much of a stop loss. Okay, I'll be back in a couple of minutes. 5 minutes more for the candle to close. We're closing bearish again. I'd be. It's not. I would may not take a trade here. If this candle closes bearish, I'm not interested in taking a trade because price should have tapped this by now. We should have tapped the entry and closed bullish, right? Because for buys, you want to see bull candles close. Now you have a bearish. Now, if this candle closes bearish in the next 4 minutes, 4.5 minutes, that means candles are closing against you if you want to buy, right? Candles, and you don't want to buy when candles are closing against you. You want to buy when candles are closing in your direction. This candle was perfect. We closed in buy direction. Only problem was no top wick. When there is no top wick, there is no range. All it means when there is no top wick is there is no range for the next candle to trade into. All right. A wick leaves a tradable range for the next candle to push into if there is volume, right? It'll push into. The problem is there is no volume because we're in a range right now, and this candle has no top wick because of that, and now we have a bear candle closing against us. So it's not a good idea to take buys. Got to be careful. It may work, buys may work, but you there's a chance that the price can go against you because now you're trying to take a buy when you have a possible 30-minute back candle close. Still have about 3.5 minutes for the candle to close. Let's see. If this candle closes as a bear candle, then I'm going to close my trades. I'm not going to take any trades. Because this, as I said, for me to for the buys, for me to take buys, this wick should have come, tapped this, got entry, then pushed up and closed either a doji or a strong bull candle to push further up. But now we're forming resistance. 3 minutes more for the candle to close, and it seems like we're forming resistance. A price could still head up here. It still could head to 3131, but the odds are reducing of that happening. The odds are reducing of that happening. 2.5 minutes more. Let's see. Yeah. So Trump's speech is second half NY session. There's a long time for that. We got about 6 hours. Very likely going to close my pending orders. Yeah, a minute more for the candle to close. I'm going to close my pending orders because there is a 30-minute bear candle forming now. Yeah, I'm not taking any buys here. You have a 30-minute bear candle close. Prices, candles are closing against me. Yeah, see that strong bear candle close. Yeah, I'm not willing to take. Price could push up, but I'm not willing to take any trades. We're ranging. We're right in the middle of supply and demand. Equal space on both sides. As I said, price can push up. We can push up to 31.31, but I don't take. That's one of my rules. I don't take. I try not to. It's not that I get it right every time, but I try not to take trades when candles are closing against me, right? On the time frame that I'm looking for my setups. Now, if it's a 5 minute candle close against me, I don't care, right? But I'm looking for these setups. I'm looking for 30 minute. I'm looking for 30-minute support or resistance form, right? My setups are based on my setups, not my entries. My setups are based on the 30-minute time frame. So if I have uh, conflicting messages on that 30-minute time frame, the time frame that I'm looking to trade on, the time frame that I'm looking for my setups on, right? So if I have 30-minute support form that is telling me to buy, and then I have immediately 30-minute resistance form, right? I cannot take that trade because I cannot wait for entry there. It just means the price is ranging, and or prices could now push down and go against me. We could come down. If we can come all the way down here. You want to take trades, whatever system that you're trading, you want to take trades when candles are closing in your direction. That's when you want to take trades, right? Yeah, I'm going to be here for another 20 minutes. I'm not going to give any setup ideas today because, as I said, it's ranging. We're waiting for, I think, in another 6.5 hours should be the Trump speech. So the market's waiting for that. So it makes no sense in trying to forced trades. Unfortunately, that's been the case the last 3 days. I mean, on Monday, Tuesday, and even today, right? So just be patient, wait. Thursday, Friday, we'll have, what we should have. There's no guarantees in trading, but we should have volume and we should have direction. Thursday, Friday, okay. So don't try. And we have NFP also on Friday. Um, so let's just be patient. If as I say always, every day is not a not a trading day, and sometimes every week is not a trading week, and that applies to mainly the last week of the month, because on the fourth, usually around the fourth week of the month, there is no news events. Sometimes even the third week of the month, you don't have any news events, right? They're all clustered into the first 2 weeks. They're all kind of, squeezed into the first 2 weeks of the month. And that's NFP, CPI, PPI, retail sales, interest rate decision, and the FOMC meeting minutes, right? These main 6 news events. These are the ones that bring in volume, and some of them even bring direction for the week, right? But they bring in volume, at least volume. So, and if they're all kind of um, squeezed into the first 2 weeks of the month, then sometimes the third and fourth week of the month you don't get volume, right? So that's why I say every day is not a trading day, and every week is not a trading week. You have non-trading days, you have non-trading weeks. You just have to be patient, sit through them, sit on the sidelines. It's always better when the market's ranging like this, when it's so obvious that the market is ranging. And that's these EMAs. The reason I have them, they serve multiple purposes, right? They are kind of a gauge for liquidity, and they also tells you when there is volume in the market, right? So when you have them flatlining, right, they cross each other, multiple times in the span of a day, right? It's cross below, cross back above. I don't know, they crossed twice here. Let's see, where is that? 2nd of April, 3 Asian session. Yeah, it crossed here and it crossed here. It crossed twice here. It crossed below and then it crossed above. So it crossed twice there. And it didn't cross here, it just flatlined here, right? So you had 2 crossings there, you had a touch here. These 2 EMAs are, if they touch, they're supposed to cross, but they didn't. They touched and just flatline, and they're moving sideways. You can see how they're moving sideways, right? So this is a good indicator that tells you price is moving sideways. Now, as I said, price did come here to the price level we had marked 3121.3, and it seems to be pushing up. It can push up. I said this before. It can head to 3131. Can head to 3133, but I'm not interested in that trade because the 30-minute candle has closed against me. I'm not interested in that trade. If this had formed here instead of this bear candle, if we had this candle and then this one happened here, price comes, taps, and we're trying to close a bullish 30-minute candle again, that's great, right? That tells me that there's volume to push up now in the NY session, and it could head to 3131, right? But right now, there is a 50% chance it could push up. There's a 50% chance we could push back down because we form resistance. And you got to play the odds. So once you see the odds, they seem to be tipping. The scales seem to be tipping the other way, where you have 30-minute resistance form when you're trying to take a buy trade. Then you need to, if you're in a trade, you got to cut some of your positions. Or if you have not got into the trade, then don't get into the trade. And that's exactly what I did. So like I said, I'm not giving out any setups today, because we're just ranging, right? We're not going to give out any setups today. Tomorrow, hopefully, we should have a better day. Um, the market also should uh, should it's it's not decided. In the market is in a very indecisive state. But tomorrow, hopefully, NY session, the market should be out of this state, this indecisive state. The market should be out of it, which means we should be having not just volume, but we should have uh, some sort of direction for the week. Yeah, price is struggling to head up. It could, but it's struggling because we have 30-minute resistance. If that wasn't there, then you have clean space to the left, right? If this wasn't there, and price should have easily pushed up without struggling like this. It's struggling because this is the problem, right? But if that wasn't there, then to the left of it is just two back candles, clean move up. So if it grabbed liquidity, should have pushed up all the way up very quickly, but it's struggling here. Mm. Just be patient. Be patient for tomorrow. Don't um, don't try to force a trade today. If price comes up, comes to these TP levels, and you don't feel like you missed out. You got to follow certain rules, um, and those rules will keep you out of trades. They'll keep you out of trades. Period. Some of those trades that it keeps you out of may be good ones, and some of them may be bad ones. You don't know. You wouldn't know which one would be the good one or the bad one until they play out, right? That's the purpose of rules. They'll keep you out of trades. But if you follow the same rules every day, then over a period of time, you'll see that uh, those rules will keep you safe and they'll keep you profitable. And there are various kinds of rules. There are rules for entries. There are rules for where you should have your TPs, your partial TPs. There's rules for where you should have your stop loss. There is rules for how much risk you should put on. There is rules for how much risk, how if you can, fade in and fade out of a trade, right? And there is and there are rules on risk management. There are all kinds of rules. But once you have those rules in place, uh, and they are planned logically, they're like a logical set of rules, and you follow them, you'll see that over a long period of time, you follow those rules consistently. They will keep you safe. They'll keep your account protected, and you will make money. It might be slow, but you will make money, right? The point is to protect your capital, right? And that's what most traders struggle to do, right? Anyone can make money in the market, anyone, right? Anyone can make money in the market. The question is, can you make money over a consistently make gains over a long period of time, over years, is the question, right? Anybody can be profitable for a week. Anyone can be even profitable for a month or two or even a quarter. But can you replicate those wins and be profitable over years? Form 30-minute support here. Yeah. 10 minutes for this candle to close. It's trying to push up. It's trying. volume could come in and this candle can close up here and then we could continue. I'm going to be here for another 5 minutes, maybe 5, 7 minutes. I didn't take any trades today. Honestly, I wasn't planning on taking any trades because of as soon as I even before I started the stream, as soon as I looked at the chart and I saw the uh, EMAs flatlining like this, all right, and the market moving sideways, I looked at the 4-hour chart, and that's all I needed to see. Right? This is all I needed to see. When I looked at the 4-hour chart, this told me uh, it's a broad and kind of an detailed picture of what's happening in the market, what's been happening over the last 3 days. We're just ranging. This is a trending market, right? So anywhere, these are New York sessions, as you can see here. Anywhere here, you can see the price moving up. We've closed above these the 4 resistance here, right? And this is the NY session, the price moving up. These are better areas to take trades, right? To look for buys. We closed above, right here, and we're pushing up, right? It's better to take. It's a better time to trade when we're moving up like this. But when we're ranging sideways like this, not so much. Yeah, we're trying to close above the 15. If the 15-minute candle closes above this resistance here, 30-minute resistance, we should push up. But the TP is just levels are just here, 39 and 60 pips away. So I'm not going to be trying to chase price. I wanted to see this candle happen here instead of this bear candle, where price dipped in, got entry, and then soon as this candle closed against me, 30-minute back candle closed, I wasn't interested in taking a trade. Still got about 7 minutes for the candle to close. I'll wait for the candle to close. Let's see where this candle closes. Again, if we close above the resistance, if we close above this 15-minute and 30-minute resistance, which is 3126, if the 15-minute candle closes above it, not at it and not below it, but above it, then we should head up easily. 4 minutes before the candle to close, still struggling to close above because of the 30-minute resistance. Yeah, 2 minutes more for the candle to close. Just be here for a couple of minutes more. We're trying to push up and close here. If you close above, as I said, we're heading up. Then the next one should pull back and break the high and then head up. But we need to close above this, above 3126. A minute and a half more. Yeah, it seems like we're going to close above. Yeah, if we close above, as I said, the next one should pull back and then go up and break the high. Should break this high and continue to 3131. Yeah, I'm not taking any buys. Just it's not worth it. Still struggling. We're closing at it, is it? Yeah, we closed at resistance. So there's a 50% chance the price can go up, 50% chance the price can push down. Just ranging. All right, that's the end of the stream. I didn't take any trades today. It's been like that this week. It's been very quiet. Tomorrow it should be a better. Thursday, Friday should be better, right? We should have volume come in, and things should be better. And next week should be good. We have next week is CPI. We got CPI next week, and we've got PPI, CPI and PPI, and then the week after that is retail sales. Yeah, and then the fourth week of the month is nothing. Okay, all right. So I'll be back tomorrow. Yeah, I'll be back tomorrow 7:30 a.m. EST, and we hopefully we should have a trade set up for tomorrow. Do we have any news? Um, yeah, 8:30 a.m. EST we have news. So we'll have plenty of time to do the analysis. And 8:30 a.m. EST we have news, and we're going to be ready for that news event. Hopefully we should have direction later on tonight, and then volume through tomorrow and Friday. Tomorrow and Friday, hopefully we have volume and we have direction tonight. Okay. All right. See you. Take care. See you tomorrow, 7:30 a.m. EST.